Good evening, ladies and gentlemen. I'm Momita, moderator for the conference call. Welcome to Q3FY22 earnings conference call for Clean Science and Technology. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephones. Please note this conference is recorded. I would now like to hand over the call to Mr. Ankur Periwal from Axis Capital. Thank you, and over to you, sir.
Thank you, Momita. Good evening, friends, and welcome to Clean Science and Technology's Q3FY22 post-result earnings call. As usual, the call will be initiated with a brief management discussion on the 3Q and the 9 months performance, followed by an interactive Q&A session. Management will be represented by Mr. Siddharth Tikchi, Promoter and Executive Director, and Mr. Prateek Bora, Chief Financial Officer. Over to you, Siddharth, for the initial comments.
Thank you so much, Ankur. I hope I am clearly audible.
Yeah, that's good. Thanks.
Good evening, everyone. I trust all of you are safe and healthy amidst this new Omicron variant of COVID. Let me begin this discussion by first telling you all that we had communicated last time about a certification called as Green Co. And we are very pleased that after a work of about a year's time, Clean Science and Technology has now been awarded a Green Co rating certificate with a silver rating, which is very prestigious, and we are we are the only company, specialty chemical company in India to have received this Green Co certification. This proves our emphasis on cleaner, innovative and sustainable chemical processes, and thus the name Clean Science and Technology. So I thought let me begin with this. During this quarter, we have launched 2 new products. One is called Parabenzoquinone, which finds application in agro and monomer industry. Again, this product was typically made by Chinese companies, and we are the only company in India to start production of this PBQ, again with a very innovative catalytic process. The second product is called TBHQ, which is used as a stabilizer in edible oils. And this product, the most important reason to start this product is all our customers who buy BHA and ascorbyl palmitate from us need TBHQ to complete the basket, and hence this will increase our package to the same customer. Going on quarterly financial highlights. So let me tell you that we are pleased that the company has recorded highest ever revenues and after tax during this quarter. The total revenues for Q3 has been at 181 crore, which is increased 18% on quarter-on-quarter basis and 44% on year-on-year basis. The domestic sales for the quarter were 52 crore and export revenues were about 129 crore, which shows a very strong revenue built up in our existing product portfolio. The company's EBITDA increased to rupees 76 crore as against 63 crore, an increase of 22% on year-on-year basis. This quarter, the raw material prices hike further increased. The shipping freight prices also increased dramatically, and also the power and fuel cost increased, and these are the 3 major factors why our raw material costing has been slightly more than we had anticipated. However, despite of very steep increases, we have been able to marginally pass on price increase to customer, but majorly because we were contracted until December, and the new contract which will start from January has still further price improvements. Our balance sheet continues to be very lean. We are a debt-free company and sitting on a cash of about 280 odd crores. Capex has been very, very timely. We have commissioned 2 new plants in our new unit, which is called the Unit 3, for manufacturing of PBQ and TBHQ, which I just mentioned. and we have also increased capacity of our product called as DHA by about 50-odd%. So the capex during the last 9 months has been 110 odd crores, which is all funded through internal accruals, and the estimate for the entire FY22 stands at about 150 odd crores. The newer plants which are going to come up by September or October 22 are the HAL series which we were discussing. The construction is on its way, and we are very hopeful that 2 of these lines called 701 and 770 should begin by September 22. Apart from this, we are adding additional line of MEHQ and Guaiacol, which will increase our capacities by almost 30 to 40%, and these lines will begin by mid of March, so almost about 1.5 months from now. On outlook, a sizable capex is underway towards existing and new products. The business, as I look forward, looks very, very strong. The growth in terms of revenue is going to be robust. Also, as we have added new products to the basket, this will help us de-risk from our existing product portfolio. Elevated raw material prices, elevated freight prices and power fuel price remains a short-term challenge for us, but our focus is to focus on continual improvement and continual yield improvement where we can offset these high prices. We will of course continue. We feel that in FY22 we'll be able to add a lot more, to add more customers to our.
Ladies and gentlemen, please stay connected. Ladies and gentlemen, please stay connected while we connect the management team back on the call. Ladies and gentlemen, please stay connected. Ladies and gentlemen, we welcome the management team back. Sir, please go ahead.
I don't know where we got cut off, but so the last point was, of course, that we'll continue to increase our both Indian and international customer presence as we are adding new products to the basket and hence adding newer customers in both Indian and overseas markets. So this is from my side. Thank you.
Thank you, sir. So shall we open the line for questions then?
Yeah, we are okay. Please go ahead.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. So our first question from Mr. Sanjay Sheer from ICICI Securities. Please go ahead, sir.
Yeah, good evening. Thanks, Siddharth, for taking my question. Couple of them. First on the PBQ and TBHQ. This will be again a export-focused business because we are talking of import substitution even in India. So one, what is the import substitution opportunity for PBQ in India? And from TBHQ, now our portfolio in antioxidant looks like it has been very, very strong. We are covering more product there. Are there any more product in the antioxidant you think will require to further strengthen your antioxidant portfolio?
So the first question to answer, PBQ has a very good Indian market. I mean, the whole reason we got into PBQ is because this is imported from China to India, and it finds an application not just in stabilizer, but it finds major application in agro industry. Okay, so this product, which started at about $20 odd, is today being sold at $30. Okay, just two companies in China are making this product, and there is a short supply of this product. So PBQ is majorly focused on Indian market, but I know as we get into these businesses, we have started receiving inquiries from Europe and US and other parts of the world. But the focus is India. TBHQ is a export potential market. The major reason is it will add to the current basket of BHA and ascorbyl palmitate, which also the similar customers also ask us for supplying TBHQ. So this is more of an export market. The second question which you asked is any other stabilizer or which we should add. So the answer is we should definitely, Clean Science would definitely want to add another product called as phenothiazine. It is a very important antioxidant, but we have yet not been successful in developing this technology. We have been fiercely working on this product, but I do not want to comment whether we will be successful or not. But yes, that is another product which I definitely want to add in our product basket.
Can you repeat the name of that product? Sorry, I didn't get it.
PTZ, phenothiazine.
Okay, PTZ. Got it.
Yeah, whatever. Yeah, sorry.
Just one follow-up on the PBQ. What is today import India do on PBQ? So in terms of quantity which India imports today?
20 tons a month.
So 70 tons a month. And what will be our capacity for PBQ today?
Right now it's only 40, and because it's a very tricky product. See, the problem is this is an oxidation reaction. And the problem is the color of this product is extremely important. Why nobody has been successful in India is because this oxidation, if it goes wrong, you tend to form a greenish product which is absolutely useless. So we decided to do it in two phases. So the building is set up, but we've only put up phase 1 right now, which will be about 40 odd tons. And I feel now we are being very confident. We have already been about a month of production. We are very good with our product color and all. Now we are already ordering for phase 2 and doubling the capacity to 80 tons, which will take about 3 months from today.
Got it. And this will be anisole value chain, both TBHQ and PBQ?
So there is nothing to do with anisole in these technologies.
Okay. Then
different raw material, entirely different chemistry.
Both for PBQ and TBHQ, both?
PBQ is an oxidation reaction. Reaction-wise it is okay, but the raw materials are different. So it is nothing to do with our existing technologies. Of course, there is a different catalytic process here, but it remains, our forte has been a catalytic chemistry. So this is also a catalytic-based oxidation reaction.
Okay. No, and my whole purpose was to understand how much we are backward integrated. Are we buying a bulk chemical to start with in the PBHQ, or we are buying an intermediate and further doing an extraction?
Yeah, for TBHQ and PBQ, the major raw material remains hydroquinone, which is also a commodity chemical and which can be purchased from US or Europe or China or Japan.
Got it. That's fair. And TBHQ capacity will be?
About 1,200 tons would be installed capacity per annum.
Got it. Now, second question, more on the margin side. You said that December contracts are over. We are getting into new contracts for the new year.
Right.
How much price hike are we anticipating to take, or we would have taken because we're already a month into it? And will that take us back to the old margin, or will it take few more months, quarter to reach that?
Yeah, I'll tell you what has happened is, I'll be very honest, the contract we started was about in the month of October or so.
Okay.
And it was a very common thing that, during this last, quarter 3, we were anyway seeing very high prices of raw material. So there was a real anticipation that 2022 would be a light year. The raw material prices will subside a little bit or at least remain constant. To our surprise, the oil prices further hiked up. That is why the raw material prices have inched up further. But what we have done in this new contract is, first of all, we are not quoting anyone on CIF basis, meaning we are only quoting X factory. So because alone in Q3 the prices of freight increased by 8%, 8 to 10% depending on Europe or US. So now all prices are only on X works basis, and whatever is the actual freight will be accounted to the freight. So hence that one hurdle is out, and we have been able to increase prices between 10 to 25% amongst the different products we have. So I am very hopeful that the margins should recover back and the RMC should again come down to between 30 and 32%, which is currently 36-37.
So we have taken this price hike across the category. So to that extent, we should see some impact coming from the Q4, or will it take a quarter or so for full implementation?
I think it should come from Q4.
It should come from Q4. That's great. Yeah, that's it from my side. I will come back in the Q4. Thanks for that and best of luck.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question from Mr. Kishan Parwani from JM Financial. Please go ahead, sir.
Yeah. Hi, sir. Thanks for the opportunity and congrats on commercializing these new products. So, if I understand it right, I think you also mentioned that this is a catalytic process that we use. So, and you have this HQ, and probably you can use this H2O2 as well to do the oxidation. So, just wanted to check, do you plan to make HQ in-house just to have that phenol to PBHQ and PBQ kind of a whole chain, or no?
It's a very interesting question. See, the point is, making hydroquinone sells like gold. So making a plant for hydroquinone is always beautiful. But the problem is, along with hydroquinone, you get a byproduct or a co-product called as catechol. And the biggest problem remains is how are you going to dump or get rid of this catechol? Because any process you do, you get 50-50 or 55-45 ratio between hydroquinone and catechol. So the problem is not hydroquinone, the problem is how are you going to sell catechol? And then for catechol, you have to get into the entire chain of making vanillin, which goes into flavor and fragrances where the lead times are very high. So as of now, we have not really thought of getting into hydroquinone catechol because of this so-called bigger problem. Plus, newer capacities of hydroquinone and catechol people are announcing capacity expansion of hydroquinone and catechol. So I think it will be interesting to see this market for the next 6 months. And if we feel that there is real need, we can consider this. But if there are already a crowded market, it is better to just buy hydroquinone and make your end products and look at that.
Understood, sir. Understood. Thanks for that. And I think just one more question from my side is that, I guess your capex for this year has gone up, I think from 120 crores to almost 150 crores that you're guiding. So is the capex for 23-24 also going to go up? And
because we have now taken Unit 4 will start, which is a greenfield project, and it's a 34-acre plot. So I feel that capex will be further more than what we did until now. So it will be one of the biggest capex in the history of company.
So can we say more like 200 crores per annum for 23-24?
Could be in the similar range, yes.
Yeah, similar range. Possible. Absolutely possible.
Okay.
And Unit 4 will be the unit where we'll house the entire HAL series. And of course, newer products for pharmaceutical and flavor and fragrances.
Understood, sir. Those are all my questions. Thanks for your time, sir. Thanks. And congrats.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question from Mr. Ritik Sharvak from Edelweiss. Please go ahead, sir.
Hi, sir. Good evening. I just wanted to ask on the capacity utilization in this quarter.
Yeah. So
In terms of capacity utilization, DCC is the most underutilized now at this stage. It's operating in the range of 30-35%. The rest of the products are operating north of 65-70%.
Okay. And sir, I just wanted to ask on this TBQ product that when do we, as you said that 40 tons are the current capacity of TBQ, right?
Right.
And sir, after this 40 tons extra that we are adding in coming 3 months, what kind of revenue potential it could give in next 2-3 years?
Sir, अगर आज देखिए $30 is the price, so $30 becomes about 2,000 rupees. So आप 60, when I say 80 ton capacity, assume a capacity utilization of say 80%. So 88 is about 65-70 odd tons into 2,000 rupees. So those are 14 crore per month, right, Pratik?
Yeah.
So it will be over 100 odd crores annual revenue.
Okay, sir. Okay. That's all from my side. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question from Mr. Faisal Hawa from HG Hawa and CO. Please go ahead, sir. Mr. Hawa, can you please go ahead?
Yeah. What is our client concentration? How much is the top 5 clients contributing to our total revenue? And I mean, how do you see the competition coming up? Is someone trying to really come up to our manufacturing best practices or the various even though we don't have it patented, but is there somebody still able to catch up with our technology?
So I'll first answer on the technology. So the technology deal remains is that we have been manufacturing or using this technology for the past 14 odd years. We are fully backward integrated from phenol to anisole, anisole to NEHQ glycol, and NEHQ to BHA. It's a long chain. I mean, we've worked very, very hard developing these catalytic technologies, getting these current yields, quality of the products, and of course approval of these products at different, across the world. So I don't think it is very easy for somebody to just come in and, start all these lines together. So I'm sure if somebody wants to do it, it should take minimum of 5 to 8 years, to get the product right, to get the quality, to get the yield, to get the efficiencies, to get approval at our customer. So it's a long process. I mean, it is not very easy to just get into these businesses.
And in terms of client concentration, top 5 clients contribute close to 35% of the top line during this quarter.
And is it a fair assumption to or any investor or analyst to make that our internal target is to double revenue every 3 years?
Interesting. But yes, I mean, if we grow at 25-30 odd %, then we should be able to double the revenues every 3 years.
Between 3 to 4 years, yes.
Yes, absolutely.
And any company internationally that you really respect, where you feel like in 10 to 15 years down the line, and where you feel that they have been able to build up a company which is beyond the immediate promoters or the management?
See, I think globally there are the way global companies operate and the way Indian companies operate, principally only there are a lot of differences. I mean, Solvay is our very big competitor, but we have very, very high respect on the way they operate, the way they have built this market over the last 15 years. Because when we are trying to penetrate these markets, which was acquired by Solvay originally, it was a task to replace them over the last 7-8 years. So of course there is a very high respect for Solvay. Of course, companies like BASF who are our customers, companies like Sunrise, the way they operate, the way they have systems in place. So of course every company has some of pluses, and we definitely look at improving from each of these companies a little bit. And not to to also add to this, that Indian companies are also very respected. For instance, a PI or an SRF are very, very respected companies in their segment, and these are some companies whom we would like to follow as well. Thank you.
Are you finding any difficulty in hiring personnel to man our marketing or production functions?
Not really. I mean, of course, with the ESOP schemes, it is helping us to retain good people. New people are also coming in. And, Pune is a hub. I mean, not many chemical companies are there. So people who are inclined to join chemical companies, the choices are limited and we are one of them. So I think it works in our favor.
Thank you a lot for answering so well.
Thank you.
Thank you.
So our next question from Mr. Ankur Periwal from Axis Capital. Please go ahead, sir.
Yeah, hi, Siddharth. So, two questions. One on the overall competitive intensity. Given that our technology as well as the catalytic-based approach gives us a very significant, cost advantage there. And there has been a raw material inflation, across most of the commodities, and probably competition both in India and abroad would be facing much higher, margin pressure there versus us. So given the RM inflation that we have, already taken, how are we placed now from a competitive positioning perspective? My sense is probably there could be much sharper volume growth for us going ahead. But your comments on that?
Yes, you are absolutely right. See, this is a year, we are adding capacities of our existing product line. Now, if we are approved at all the accounts, now the second question is, what wallet share of business can we take from our existing customers? Okay. So, if we are able to offer them right price, 22 would be a year where we will be able to really grab bigger market share across the customer levels globally. And I think, as a company, when I look at sales, I think this opportunity we don't want to lose, because if we are able to get a strong foothold and if we are able to prove to these large MNCs that, of course we are competing with Solvay, but if we are able to deliver products right on time at a good quality, good price within Europe, I think it will give us a very strong foothold for coming years. So I think that's a very strong advantage for us for increasing our revenue growth. And maintaining having decent market price.
Sure. And in the starting, you did mention your focus not only to add new products which we are adding, but also to add new customers, across geographies. Any specific, maybe geography-led focus here, or probably it's more higher wallet share from the existing ones there?
So I can only say that we have increased our wallet share, for instance, with BASF. We have now secured a 3-year contract with BASF with almost 70 to 75% of their business. This business was not with us until now. We were always the minor share, but in the next 3 years we have got a majority share at BASF. I want to give you a reference point. An example.
Sure. That's helpful. And just lastly, as you mentioned on TPHQ, wherein we are focusing, adding more products, trying to get more wallet share from the customers. Are there many more such products which are supposed to be launched maybe over the next 12 to 18 months, apart from the HAL series? And adjacent to that, from HAL's perspective, are we targeting the existing customers, or it will be a mix of existing plus the new ones?
No, I'll give you. HAL, for instance, the first 2 products which are going to come up, these are called 701 and 770. 770 is entirely, all master batches in India are buying this product. So it's an absolutely different market. We have already started talking to different distributors or different customers in India. Currently, 770 is imported to the tune of 3,000 to 4,000 tons per month in India. 3,000 to 4,000 tons per annum to India. And our first set of capacity is only 2,000 tons. So absolutely new customer base, but more than happy these customers are currently only dependent on import for these products, and we will be able to offer them. 701 is a product which goes into water purification, apart from stabilizer in monomer industry. Again, a very different application, but very similar chemistry as 770. So very new customers, new geographies, and a lot of interesting developments. Apart from HAL series, we have developed some products which will go into pharmaceutical intermediate, perfumes and fragrances, which has both the mixed domestic as well as export potential.
Sure. Great to hear that. Thank you, and over to you, Momita. Thanks.
Thank you.
Thank you, sir. The next question from Mr. Prashanjit Bhuiya from Kotak Institutional Equities. Please go ahead, sir.
Hi, thank you, sir, for the opportunity. I have one question regarding your new products, TBQ and TBHQ. So normally you are backward integrated for your existing products. For this product, since you are not backward integrated for hydroquinone, so will you be as cost competitive as your Chinese peers? And secondly, what are there any other products also in this particular hydroquinone chain which you may look into to enter in next coming few years?
I have not understood the second part. I have understood about hydroquinone. See, all the products which we manufacture, never we started with fully backward integration. The backward integration always comes from first we establish these businesses, and then if there is a need or we feel we have a better chemistry, then is the time to go backward integration. I mean, anisole plant was only started in 2017 or 2016, whereas we started MEHQ and glycol in the year 2008. But of course, we are not going to wait for additional 10 years to decide if we want to go backward or not. But of course, I mean, when you start a business, you would first want to focus on the end product, try and get those markets, grow that business, and then you start thinking whether if there is a real need to go backward, depending on how the source of raw material is behaving. If we are able to work on a contracted price with one of the large producers, then it would not make any sense for us to really make these products. You know what I mean?
Yeah.
And in the HAL series, anyways, we are starting from acetone and ammonia, which are anyways a basic starting material. So there, anyways, we are starting with fully backward integration.
Got it. And on my second question was regarding this products, hydroquinone chain. Are there any products also, byproducts or forward integration, which you might like to go ahead and do in coming years?
Sorry. Can you be louder?
I'm asking in hydroquinone chain, so are there some other products also which you may target to enter?
No. So our hydroquinone base, we have only 2 products, and I think so far that is what we have on our plate.
Okay. And this phenothiazine is based on which chain?
It's based on diphenylamine. And yes, if we get into that, we will definitely make diphenylamine, which is based out of amylase.
Got it. And finally, for your existing products, since you have expanded your capacity, so can you give us some timeline of capacity ramp-up utilization for next 2 years maybe?
Sorry, product?
For your existing products like BHA and MEHQ, so what kind of capacity ramp-up can we expect for coming 2 years?
BHA we have already done. It is a 50% ramp-up. TB and MEHQ glycol is closer to 40% ramp-up.
No, I mean the utilization coming on the new capacity.
Existing plus 1.4 times.
Capacity utilization.
Yeah. So percentage in terms of utilization levels for the incremental capacity, we are looking at 50 to 60% of utilization in the first year itself, except for the new products, which is HALS or PBQ or TBHQ. But for the existing products, which is MEHQ, glycol, BHA, we are looking for the range of 60 to 70%.
Okay, got it. Understood. Thank you.
Thank you, sir. The next question from Mr. Rohit Nagraj from Emkay Global Financial Services. Please go ahead, sir.
Yeah, thanks for the opportunity. So that's your first is in terms of pipeline of products. So just now you indicated that we have will be commercializing PTV. Similarly, generally, how many products are there in pipeline, and given our experience in the past, how much time does it take to commercialize these products? Thank you.
Phenothiazine we have not developed, I mentioned. I said it is on our wish list to develop that product. That is one. Typically, it depends on chemistry to chemistry, but typically a product development happens when you start from scratch, it typically takes about 6 to 12 months time frame, depending on how many stage product is, how complicated it is, and all that. And to set up a facility for us takes about 12 months to 15 months time frame, and then market. So you can assume a 1,000-day plan from conceptualizing an idea and to be reasonably commercially placed will take about 1,000 days.
And does this also include the environment clearance which is required for it, or do you usually take it, before, I mean, once we start conceptualizing the particular product and, we take the environmental clearances beforehand itself so that the process does not elongate further?
No, listen to me. We don't do that because environment clearance is only taken once. So we anticipate that these are the products which will come up in the next 5 years or in the next 10 years. EC is obtained. Whenever there is change and whenever there is a new product, it is very difficult for us to forecast what are we going to do after 5 years. So whenever there is a product addition, we have to go to an MPCB board and ask for a product change or an addition of a new product.
Right, got it. Second question is on the new unit. So unit 4, once it is set up in terms of initial capacity, and given the current momentum of investment, and you indicated probably we have a potential to double our revenue over the next 3 years. What is the potential revenue that can be generated from unit 4?
If everything goes well, I mean, it is going to be very difficult to answer. But see, today it's about 34 acres of plot. It can be between 1,000 and 1,500 odd crores.
Yeah. So typically the asset turn would be in the range of 2.8 to 3x.
3x, you will be investing close to between 3 and 500 crore into 3 times. So 1,500 crore ka revenue is expected out of 34 acres when it is fully utilized, which will take 3 to 4 years time.
Right. So effectively for the next 5 to 7 years, we do not need any more land in between based on our growth rate. So we may try to find out a newer location or a new land parcel.
No, not for next 5 to 6 years at least. Additional location is not on the cards for next 5 to 6 years.
Unless we get something very interesting in inorganic growth, then it is a different case. But I think for the next 3 years, we are sorted with Kotak.
Right. Any update in terms of the R&D team, R&D investments that are going in, expansion of the R&D team, anything on this one?
We have a very solid R&D team with about 50, 60 scientists working with us. We have about 6, 7 odd PhDs. And we are working on extensively on catalytic chemistries, which I mentioned. And so far, we have constructed very recently a new new R&D lab in our Unit 3, which is just operational about a month ago, one and a half month ago. So far, and plus with the Unit 4, we'll come up with another R&D center. So we will keep growing on R&D capabilities and capacities for sure.
Right, got it. Just one last question. We have quite ambitious plans in terms of investment and growth. So any new key managerial positions which have been added in the recent past on the senior levels to take this growth forward?
A lot of people were added, in different segments from HR to production to R&D to purchase. There is a lot of addition. It's a growing organization. You can imagine, there is always addition, and plus as newer units are coming up, newer production sites are coming up. Each plant needs to have a dedicated production department, maintenance. So, it's a package, So as and when we keep on growing, this entire team will keep adding. Both in account, it's entire day, we keep adding in purchase, sales, accounts, production, maintenance, HR. It's a very regular affair for us.
Thank you, sir. Our next question from Mr. Abhishek Panikkar from Value Educator. Please go ahead, sir.
Hello. Yeah, thank you for the opportunity. Hello.
Yeah, we are there.
Yeah. Can you help me with the margin hierarchy for the following products like TBHQ, BHA, MEHQ and everything? Like how does they rank in terms of margins in depending order?
See, I'll tell you what happens is, any newer product when you add to the basket, you'll always be with lower margins.
Okay.
Because you are working on it. I mean, there is a lot of work which will still keep going into it. So any new product margin will always be much lower than the product which has been manufactured over the last 10 years. So it is a very difficult question to answer. As these products, mature, as our people get hands-on experience on managing these things, the yield efficiencies, and of course the costing improves as and when we move on. So newer products always less margin, older products always better on margins.
Okay. Thank you. That's it from my side.
Thank you.
Thank you, sir. The next question from Mr. Anubhav Sahu from NV Research. Please go ahead.
Hello. Yeah, hi. Thanks for the opportunity. Couple of questions. So one, if I got it right, for MEHQ and glycol, in next 1.5 months, we would be increasing our capacity by 30 to 40%. Is it right?
Right.
So, could you specify that post expansion, what would be the capacity in both these products?
No, sorry, we are not comfortable sharing product-wise capacity.
Okay, no problem. And if possible, in terms of the broad categories like performance chemicals or pharma intermediates, will it be possible?
Yeah, we'll get back to you with this, but overall the capacity expansion post this phase, the capacities would go up by around 60% with all the three segments. Yeah.
Okay, at the base, I mean, taking the base of 30,000 in the fiscal 21.
That's right. Yes.
60% on that. Okay. Okay, that's great. And if you could, talk a bit about MEHQ's, end market distribution. For example, how much revenue, for example, comes from super absorbent polymers and so on. Any approximate number, like how is the revenue?
So majority of, yeah, sorry, can you repeat the question?
Yeah, basically, my question is with regard to product MEHQ. What is the, the end market distribution for this product? In terms of
usually this market is about 80% goes into monomer industry as stabilizer, and 20% is 15% could be about agro, and 5% could be other applications.
Okay. And in this 80% which goes to stabilizer industry, I mean, in the monomer industry as a stabilizer, how much, maybe it's a nascent industry right now, but how much it goes for super absorbent polymers?
I think out of that, 30-35% could be going in SAPs. So it goes into acrylic acid, and acrylic acid is used into a variety of applications, including super absorber polymers. And super absorber polymer is growing at 6 to 7 odd %.
Mm-hmm. Okay. So approximately 1/3 would be going for acrylic industry.
I am assuming that.
Okay. And China happens to be a key market for us, like almost 40% of revenue comes from there, right?
These MNCs have moved their operations in China.
Okay. And is there any, product differentiation, I mean, in terms of what is in demand in China compared to the rest of the world as far as we are concerned? I mean, in terms of what is our packing order, what kind of products we sell to China?
Sorry, could you repeat?
The kind of products which we export to China, are they, what kind of products actually are in demand in China as far as we are concerned?
We are selling all the products in China. We are selling MEHQ, we are selling glycol, we are selling format, we are selling BHA, we are selling ascorbyl palmitate. All the products going, where we are currently selling Veratrol. So yeah, all these products go into China market.
Okay. But okay, thanks a lot. That's helpful. Yes.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So we have a follow-up question from Mr. Sanjay Sheer from ICICI Securities. Please go ahead, sir.
Yeah, thanks for taking my question again. First on the Hull series, I thought Hull has also a strong presence in the stabilizer category where we have a large portfolio, and we have chose to come up with master batches. Is that master batches you're telling you is a stabilizer product in domestic market?
You're right. HALS itself stands for Hindered Amine Light Stabilizer. So it is in the stabilizer series. So that is question answer one. And two is master batches in India is one very large market. I mean, master batches across the world uses 770. But for us, the most easy market to gain is Indian market because we are sitting right here. And it is imported to the tune of 3,000 to 4,000 tons per annum. So, I mean, our focus would not be to export this product, but rather develop this Indian market for us.
Got it. And whom will we be replacing this product? Because it looks like quite a big product, even from an international opportunity perspective.
So, the bigger players in this would be BSF in Europe, Sabo in Italy, and there is one guy in China, I'm just forgetting the name. So, there is
Everlight.
No, those are Taiwan. I'm forgetting the name, sorry. It was just there, but I don't know why I'm missing it. So there are majorly these three companies are exporting the products to Indian market. So these will be the people whom we will replace. And
got it.
I mean, today the duty is about 7.5% on these products. So that will also be very beneficial to us.
Got it. Second, on the MEHP and therefore, we said that the utilization X of DCC is around 65 to 70%, and we are adding another 30 to 40% capacity in the MEHP and therefore, and we are guiding for an utilization of 60 to 70% in new capacity, and I believe that we will be ramping up the existing capacity. But that indicates a significant volume growth for a performance chemical in FY23. Is my understanding right?
Absolutely right. We are, the performance chemical business will increase. See, MEHP, the biggest advantage is we are also using it in captively to make our own BHA. So part of it, and we are adding big quantities of BHA also. Hence, part of this MEHP will be used captively, and the balance will be used for selling to the market. So that is the plan.
Fair enough. Okay, because we are adding 50% capacity in BHA. So telling a lot of MEHP which will produce will get consumed internally.
Yeah. So, for instance, BHA, we have witnessed almost 50% YOY growth in volume terms.
You are talking 9 months?
YOY, Q3 versus Q3.
That's a Q3 versus Q3. Got it. One last follow-up on the hull series. You said that we will be looking at a larger capacity in the hulls for the Unit 4, and Unit 4 capacity or a capex itself looks like a huge 300 to 500 crores. How many products in this series are we planning to come up with?
See, HALS, when I said 300 to 400 crores, it is not just HALS. It is a 34-acre of plot. There we'll also come up with a lot of pharmaceutical intermediates. We will come up with other products as well. HALS is one large segment which will come up very quickly. But there are other products also which will come up. So it's a cumulatively, I mentioned, between 300 to 500 crores. And HALS, which you said, would be about between 6 to 9 products of HALS. Different numbers like 701, 770, 292, 622. So these will be about 8 to 9 products in HALS series.
Got it. No, that's fair. In the pharma, are we looking for a long-term contract, or it will just be an intermediary which we will sell in the market, or we are looking at some kind of a long-term tie-up for this product?
The pharmaceutical intermediate, we are not supplying to one major customer. There are ample of customers throughout, globally. So today they are all happy with annual contracts or half-yearly or quarterly prices. And that is how it works. And entering into pharma is also, they mention us in DMFs and all. So typically it is not easy for a new entrant to come in these businesses because the validation and all takes a really long time, stability of the end APIs. So it's a very complicated business. For us also it took about 7 years to get into big accounts. So I think we are comfortable this way, we are comfortable that way. So I think this is how it will work for us.
And will it be a CGMP plant, or it would be unmanaged N2 to N-5, so it will be normal manufacturing.
It's all KSM, key starting material, so we don't need any FDAs or DMS filing for our products.
Okay, so that's not required for us. And will it be an import substitution kind of a market? We are looking at India generic company, or we are looking at a novel products globally?
Yeah, like DCC is an import substitute which goes into antiretrovirals. Again,
Right.
this is the only company, having such large capacities of DCC.
No, I'm just looking at it because we have seen a lot of pharma companies coming under the pricing pressure, and at the same time we have seen a lot of API companies also coming under the pricing pressure. And then this trend is predominantly towards the India generic company. We just wanted to understand what will be our larger segment. Will it be an import substitution, or we are looking at a much larger export market as well?
No. It will be majorly import substitute for pharma.
It will be major import substitute for pharma.
Yeah, because pharma is very, very concentrated in India.
Right.
India and China have become the biggest producers of API globally. So I think it makes sense for us to focus on Indian market, which is a very big market for us right now.
Got it. No, thanks. That's answered all my question, and best of luck again.
Thank you.
Thank you, sir. I would now like to hand over the floor to the management for closing comments.
So I think the call went well. I think we have been able to express our thoughts, how the business ran in quarter 3. We are really hopeful and confident that we will have a good quarter 4 as well. And if I have been able to answer questions, if there is anything further, you can email us to our team, and we'll be able to answer those questions subsequently. That's all from our side. Thank you so much, and be safe and healthy. Thank you so much.
Thank you, sir. Ladies and gentlemen, with this we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good evening, everyone.
Your conference is no longer being recorded.